This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is 9/27/21, show number 324. So this is a rotation day, isn't it, Nick?
It really is. If you look at the markets today, we saw at the open this morning really a big rotation out of technology. And tech has been the hot sector, but today you're looking at stocks like Amazon down over 2%, 73-point decline as I speak, and a lot of other equities too. Looking at some semiconductors that are down, a lot of cloud stocks that are lower. So we are seeing some money flee technology as interest rates go up, and we are also seeing money going in to some areas that have been beaten up. Russell 2000, which is small caps, getting a big surge today, up almost 1.7% today. So that's a big move for the Russell, and that's a big money rotation move as well. So as these markets have done all year long, they've just played this game of hot potato where money has left one area, gone into another area, and we sometimes see that almost on a daily basis. But that's what's kept these major indexes afloat, and that continues today.
So taper tantrums, we're past that now. We're past Evergrande for now. We're past all the negative stuff.
It seems that way. It seems like the market has once again climbed the wall of worry, and the most hated bull market is still a bull market.
All right. So, but what about inflation? Now we know we now are pretty certain that that transitory inflation is here to stay.
Well, I think it is. You believe it is as well. But does the market seem to care? Doesn't seem to mind right now. The market just seems to be holding up, and then you get these money rotation moves, and the market just seems to, you know what it really seems to me? Money has to go somewhere. And the Fed has not tapered yet. They talked about a good game, like they say they will taper later this year. The ECB did mention that they were going to do a minor taper, but either way, there's still tons of money and liquidity in the system. Then when you put in the money from the other central banks, excuse me, that are all doing the same thing, it's just the money's got to go somewhere, and it seems to just go into and flow into equities.
Okay, well, I guess until it stops, that's going to be it. And we always say the trend is your friend, except at the end.
That's right. And right now, it just seems like every time you get a sell-off, it leads to another rally. And that's exactly what we've seen so far.
I find the whole thing fascinating, but we'll see. Well, so Bitcoin, now we've seen that in China, possession with intent to distribute Bitcoin can land you basically in prison, I guess, or in a re-education camp where you learn that Chairman Mao loves you, right? But they're holding up pretty good, considering that that is the biggest producer, the biggest Bitcoin or token mining center in the world, and a huge user of Bitcoin to avoid currency controls and currency translation fees, all of that.
Yeah, I mean, right now, there's really nothing new out of China that we didn't know. It was just really reiterated, right? We already knew that it was illegal and they're not a fan of it. But what Bitcoin has done, it successfully has tested that 40,000 level on the futures, and it's held there. But if that level cracks, we're going to go down fast, and you're going to go down very fast. So just, use that line in the sand right there, right around that 40,000 low. But if that level goes, it's going to be a failed pattern, and you'll see a lot of downside very, very quickly. And just a reminder to everybody out there is the more a level is tested or a support level is tested, the more it's tested, the weaker it becomes. So it's almost like if you're starting to bang on a door. If you pound on a door a couple times, no big deal. But if you pound on it with a hammer and you keep hitting it long enough, eventually the door is going to give way. And that's exactly, what you could be seeing here with Bitcoin. But for now, it lives to fight another day, and we'll see how it plays out going forward.
Okay, what's that crucial level again? Just so we can put it in
40,000.
40,000?
Yep. Just use 40,000. It could be a hair less or above, but it's right around that 40,000 mark.
So if it breaks 40K this time, and after so many tests, right?
Yeah. Then you'll go down and test the old lows, which were around 28,000. I think, down there you'll probably find some support. Or you might even test the 25,000 level. But that's how the chart looks right now. That's how it's set up to go.
All right. And finally, gold and silver.
Yeah, so gold today actually started the day out pretty strong, and then it rolled over a little bit. Right now, as I speak, gold is basically flat on the day, down a point. So I don't want to make too much out of it, but all in all, gold did not hold its earlier pop this morning. But what is holding today is silver. Silver's acting pretty well. Silver futures, as I speak at the moment, where is that chart? I believe we're up about a little over 1%. So not a bad day for silver, and we'll see if that can get itself going, because that had a rough week last week. But so far, silver acting pretty well this morning.
All right. Well, hey, I guess inflation be damned. As long as you have a lot more money, then maybe you're less concerned that the money you have is worth less. If you keep making more, certainly the 1%, that's the case. But eventually the chumps at the bottom of the food chain catch on, and then you see this massive exodus out of cash into hard goods, whether it's appliances or real estate or anything, just to get rid of the cash, which is rapidly losing value. Supply chain issues here, I have a feeling they run a lot more deep than it was just a certain health issue that caused the initial supply chain disruptions.
Well, that could, that's likely, because, I've never seen anything like this. I've never seen it, at least that I can remember, where we have so many supply disruptions almost everywhere you turn. So it really is, it is a little bit baffling to me, at least, what is causing this. Semiconductors, I've been trading semiconductors my whole life. I've never seen or heard of a semiconductor shortage for this long. Once your semiconductors made, you could just print them up. They print them like paper. But apparently it doesn't work like that anymore. So it's very, very strange. And we'll see where this goes. But there's shortages everywhere.
All right. So let's look at Henry Hub natural gas on the CME. It broke $5. So people are thinking, the parabolic move is over today. And this is on CMEgroup.com's website. They're quoting a price print of 560.05 per million BTU, which means this thing's going to break $6.
Yeah, it's off to the races. And I'm going to explain exactly what happened, because I told my members about this as well. I said we had a nice pullback right into the 20-day moving average. That occurred really right around the 21st, the 22nd, and it was set up to go higher. And now you're looking at Natgas, breaking out to new highs. I think you're probably going to see this continue to climb. Right now, a good day. If there's any kind of major reversal, then you get cautious. But right now, this has been a powerhouse commodity, and it's still climbing.
And what so many people don't realize about Natgas is it really is more important in many respects than oil. It really is, because production of it displaced a lot of oil consumption over the past 30 years, 40 years. Since the Arab oil shocks, we switched to nat gas, and then we had this fracking boom. And then supposedly the health issue reduced nat gas production in the U.S. But Nick, I know you follow these markets. For years and years, we had tens of thousands of shut-in wells because nat gas was trading below $2, and they weren't profitable. Only wells with wet gas and low-cost wells were profitable. I can't find any mention of any of these shut-in wells anyplace. But I do know when I see a parabolic move that is still going up, and this is certainly one of them. It could conceivably hit 650 to 7 here.
Yeah, when you look at this chart, and that's what I am, a chartist. I'm never really following, the story or following, how many wells are in operation. All I know is that you have an administration that doesn't want to do any of this, doesn't want to produce nat gas, and they're actually outlawing it. But when I look at the chart, and I'm looking at a monthly chart of nat gas, once you break through 750, it's back to $10. pretty quickly. So that's the rise that this can have. And when you get these big surges like this, these moves don't end that fast. They last a long, long time. And, even when we had the pullback just, a couple weeks ago, that's what I was telling my members. I was saying, listen, this is a bigger story, and it's not the story that's telling me, it's the chart. So I think you got to look at the Natgas chart and just say, all right, this 750 area is a big resistance level. That goes back to 2018. 2018 high was 769. Once you get through there, it's really just straight up to $10.
$10 Natgas, and that is profound. There's a lot of fundamentals that have changed. Used to be these utilities, pipeline companies would have 10, 20-year fixed price contracts. The trend over the past 20 years has seen the end of long-term fixed price contracts, shorter term, 3 to 5 years, and hedging on the spot market, hedging on the futures markets to stabilize prices. And like I say, nat gas, fertilizer, they use it for, this is wet gas, and propane and everything else that you can imagine is used for nat gas. So
yeah, and people don't forget all of the conversions we've had in the past 10 years. Buses moved over to nat gas usage. A lot of government trucks and government official trucks have moved over to nat gas. We've seen a big shift, and because nat gas was so much cleaner, so many homes in the Northeast have moved over to nat gas as well. These people are all going to be paying a much, much higher bill than they're accustomed to.
Okay, and yeah, everything, electricity, heat, cooking, you name it. Luckily, I don't use too much in my house because it's just me, but I can just picture the toll this is going to take. People aren't used to escalating nat gas and electricity prices. I think a third of the energy in the U.S. Electricity comes from nat gas. It's really, forget it. It's going to have a profound effect. All right. Finally, we got a question from a super listener. Francine wants to know about Nvidia. Buy, sell, get rid of.
So right now, when I look at the Nvidia chart, because that's a ticker symbol there, the stock is still holding up very well. The problem with it is it's had such a big run that at this stage of the game, how much is left in the name? So you want to be a little bit careful with Nvidia up here. If you own it, I would put a trailing stop in. But if you do not own it, I would not be committing new funds to Nvidia, especially if interest rates start to make a little bit more of a move higher. This stock could stall out. It is still the top semiconductor out there. So that is the positive. The negative is the run has been too big. Wait for a pullback. Wait for some kind of correction in the name. But I would not be chasing it here if I did not own it.
All right. Well, I think that's about it. Make sure you go over to inthemoneystocks.com, see how Nick has beaten the averages for decades, and look at the Twitter feeds at ITMS, at Nick Santiago01, and at Kerry Lutz, and send us your emails. Keep them coming to KL@kerrylutz.com. Nick, we'll talk to you on Wednesday.
Sounds good.
This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.